Good morning. Good morning. As of right now, it is 5 o'clock in the morning, and we're gonna go ahead and get started. I want to go ahead and break down full different things that's going on. So, as of right now, we have conducted our weekly pre-market analysis yesterday, and just some kind of information that we are currently running. I have this prop firm account that I'm looking to try to pass. And I want to say thank you to Calvin at the New Beginners podcast. Um, Forex Beginner podcast. The reason for that is I was one of a few that won a prop firm challenge. So I am currently working on utilizing my risk management that I've learned, and I'm planning to continue to practice getting better and better every single day. We are currently in 3 total trades at this very moment. We have the balance was a $25,000 account, and all we need to do is pass, I believe, a 10%, which should be about 27,500 if I'm not mistaken, something around there. So we're currently in these 3 trades, win or lose, which is perfectly fine. We're going to go ahead and conduct our daily pre-markets to see where we are looking on all of these, if we have to exit for any given reason on any of them, or the plan of action is to hold them. Right, as I am a swing trader, I'm planning on holding until we get to take profit. So this is just a little breakdown about my trades. I'm currently in GU. I saw a really nice buy opportunity. This was the most recent higher low, and so we made last night a new higher low here with a slight higher low right here as well, off of the 1 hour time frame. And then on top of that, we had a push to the upside off of the 1 hour, crossing over the EMA. Whenever I get to trading view, you'll see this a whole lot clearer. So beyond that, just kind of show you, I've been in UJ for a little while. So I got in UJ upon this bullish engulfing bar here, and this was in the 4 hour time frame. UJ might have an opportunity where I might need to get out based upon the most recent candlesticks. There's a difference between a pullback and then a reversal. As of right now, it looks like it could be reversing back to the downside inside this consolidation zone. If it holds this trend line, then we could continue higher. But yeah, I'm going to go ahead and take a look in just a second. And then last but not least, we have gold. We have gotten in gold right over here on December 31st. Was it? No, it was this bar. My apologies. It was still December 31st. But it was upon this bullish engulfing bar. So I went ahead and entered off of this bullish engulfing bar and then put my stop loss down here. And then we were riding the trend overall. It has now almost stopped me out twice, but I'm holding my plan. And as long as I go with my plan, that's all that matters to me. So we are continuing. We had a major retracement here. Thought process of a possible reversal was happening, but then we had this huge gap up first thing in the morning, and now we are riding the trend going higher. So we'll get into that in just a moment. So let's go ahead and jump into our Forex Factory, because it's going to be the first thing for our pre-market analysis for the day. So right here, we just want to look at Monday, the information that we have, and then going into tomorrow before we get to the markets. So with today, we have PMI. So we have USD with PMI as of today, starts at 9 o'clock in the morning. So we just want to be mindful that with PMI coming out, we are going to be pretty much have a high probability of price going in our direction, and then could snap back for a little while, and then it could just consolidate for like an hour or two in that regard. So that's just one thing to have a possibility where we could have a fell break to the downside, breaking lows, and then it could continue higher, right, as a manipulation move. And then beyond that, not too much other news for today. And then going into tomorrow morning, not much news events coming out that are needed to be looked at, minus EU, like the euro. So we have a CPI event that is occurring with a orange folder. That one is a all-day event. I'm not sure exactly when it's dropping, so just be mindful of this one throughout the day. But beyond that, we'll be back before 7 o'clock tomorrow morning. So therefore, we don't have to technically check all the rest of the information here. So that's pretty much everything on Forex Factory. Going right into the charts. Yesterday, I kind of elaborated a little bit upon like market structure that I see and everything in that regard. So today, we're going to kind of break this down. Now we're going to go ahead and we will start still with kind of taking everything off. And we're going to start from top down analysis, right? So weekly time frame, we are still in this bearish momentum that is forming as of this moment. We have been heading down. We have now kind of made more of like a weekly retracement a little bit. So right here, we're jumping onto a daily time frame. Daily time frame, we are currently in this bearish move. We had most recently a bullish move with this 1, 2, 3 triple top, and then we started breaking these lows, giving us back into the overall bearish move. So the way that I kind of see this is we were in a bearish move right here. We now went sideways, and right now we're currently trying to continue down. At this very moment, if you look at most recent days, right, because these are each daily candles, right here, we have this downtrend in the most recent days, and we have broken this downtrend. Now we came up, and I mentioned that even after this trend line has been broken, we could possibly continue to retrace back to possibly this 50% or up to the 61% area on this weekly Fibonacci here before we continue breaking the lows once again. So this is currently where we are at. We are at a double top, and we are having a strong amount of rejection here. So a lot of resistance right off of this support and resistance zone, right? So this support and resistance zone, the way that I like to look at it, very simple, is you can see that there's wicks, 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 and I'm just like tapping where all the wicks are. You could even bring this down a little bit here, right? Kind of tapping where these wicks are. And then we can bring this up a little bit here just to kind of give it a little bit more crucial area of like where it's really wicking at. And you can even draw it over, right? If we continue to draw it, there's previous wicks in the past also rejecting it as well. So from this support resistance, we can see that it already held resistance once with a major push down, trying to continue the trend, and we broke a low from here. Now we are currently in this pullback of an uptrend, and we noticed these last two bars kind of got stronger, but as of right now, we are currently becoming weaker. So we have to see how the day ends. If the day ends where this is really weak, that would be a really great sign in order for a possible continuation to the downside. And if this was to become a bearish move, that would be really good because we're also in UJ. So with UJ, if the DXY is going down, that means UJ should be going, well, technically that would be bad for UJ because the USD is first. So therefore, if the DXY is then going down, UJ would then start heading down. Doesn't mean it's going to be guaranteed, but it's just to the statement where it definitely likes to follow the DXY very closely. So if this does give a rejection right here and then continues lower, I would be anticipating that I'm going to need to get out of my buy position off of UJ and wait for either this move to become bullish or to wait for UJ to become better signaled for a bearish move. So as of today, this is starting to consolidate in the sense of this most recent high and this most recent low. So because market structure off of the daily is this high to low to high to low to high to low, everything in between these most recent high and low is all consolidation wise until you have a breakout to the upside or you have a breakout on the opposite side of a breakout to the downside. So that is pretty much what I just wanted to pinpoint off of DXY. And then beyond that, so direction based, we're kind of indecisive as of this moment, right? We could continue higher, but right now we are showing a lot of opportunity for a possible rejection. Again, I don't go lower than the 4 or lower than the daily off of the DXY, but let's go ahead and jump into GU. And we can actually see why I got in earlier this morning. So let's go ahead and start with the weekly time frame. Weekly time frame. We are overall in this bullish trend right here. And then we have this major pullback off the weekly time frame that we already tapped twice. But on the bullish trend, we have 1, 2, 3 taps with this nice W pattern and bullish push. So on here, we're going to drop to a daily. So on the daily time frame, and if you wanted to look at the charts much clearer, you can see off of this daily, we are coming down off of this major push down, and then we get a nice rejection here, which is an equivalent amount of price action, and then price comes up, makes a lower high, and then price comes down, makes a higher low, and then price then comes up and starts making a higher high, higher low. And this all started right at a key level of 1.300, right? So beyond that, we are currently in this bullish trend up. Now, I just want to show you, I'm purely off of market structure. I don't go solely off of trend lines only. I'm market structure first, and then I add in trend line, support, resistance, Fibonacci's to add texture, like to add more areas of interest. But my number one priority is market structure. So market structure, I have listed right here in blue. All of these little dots are indicating the high, the higher low, higher high, higher low, so forth and so on. So as of right now, this is the most relevant higher low, and this is the most relevant higher high, meaning it's technically consolidating inside this bar, and that's where I put a Fibonacci zone from this higher low to this higher high, because I'm anticipating a pullback to the 61, right, max of the 78, and as low as the 50. So if we're looking at not only this rejection here, right off of this support zone at the 61 Fibonacci, and with a higher low presented, we now created a nice higher low with a trend line, and we can delete this one because this one's broken. We had a nice bounce off of this now formed trend line. Then price made a doji, and then price overnight, ever since the open, price pushed all the way down, took our original stop loss out right here. So our original stop loss was over here. Whenever I get down on the lower time frame, I'm going to show you. And then price has bounced and made a higher low from this higher low. And now we are making a triple touch point at this trend line. So it's a smaller trend line, but it's still holding structure. So when we drop to a 4-hour, we can see right here originally, price pulled back, right? Price was in a pullback. Price then made a lower high. Price then came down and made this nice hammer candle right here. You can call it a doji, you can call it a hammer. I called this one a hammer. Really big wick to the downside, little tiny bar to the upside. And then so beyond this, I was anticipating it to continue from here. But what happened was price came up, made a new high, but rejected in the same candle. So what I did was I immediately took off half of my risk for this trade. So therefore, if it failed and broke the low, I could re-enter for the half position that I got out of. So that is literally what I did. Price went up, attempted to go in my favor, rejected, cut half my trade, saved it for later, and then it came down, took my stop loss, which was right here on off of this hammer candle, and then right after getting me stopped out, which can happen and does occur, it gave this nice tweezer bottom with this kind of bullish engulfing bar kind of barely getting right above the previous bar. And then whenever I'm looking at this specific bar right here, I'm breaking it down even on the 2 hour. So if you look at the 2 hour, it is a nice triple touch, right? So touch 1, touch 2, touch 3. You can even say on the 2 hour, it has a fourth touch in a sense. So price gave this tweezer bottom right here, gave kind of like a doji-ish candlestick right here. And then right here, it gave a bullish engulfing bar, engulfing this bearish engulfing bar. And it got above the EMA, which is also at, right, my 50% Fibonacci zone. It's already came down to my 61. So therefore, the Fibonacci is looking good. It already came to my support resistance zone, which is right here, right? And now it's giving a higher low after rejecting it really strongly. So therefore, I liked how it was a fib, so that's a check. I liked how it was at my support resistance zone, that's a check. I liked how it's a triple touch to the trend line, that's a check. And then it gave a bullish engulfing bar above my 9 EMA, which is 2 checks. So that's 6 reasons to get in. So for those reasons, I had to do another buy opportunity. So I put another amount, the other half that I risked, that I originally took off the trade. I put that back on this trade. I put 70% of that trade off of this higher low. And then I put the remaining 30% of the trade off of this higher low, giving me a better opportunity to swing trade this entire position all the way to the Fibonacci zone off of the 4 daily candles, all the way up to 1.359-ish area. So beyond that, you could also look at the 1 hour just to kind of see how this formed. And just kind of looking right here, this formed a nice morning star. So you could also look at it in this regard, where price rejected the EMA here, and then price came down, made this higher low, and then gave this bullish engulfing bar. So you could say this is a bullish engulfing bar breaking EMA. You could say that this is a morning star, right, with a higher low. For all of those kind of reasons, you could have got in. So I got in based upon the 2 hour break of the EMA, but you could have utilized the 1 hour as well. So that's pretty much what I got on GU as of right now. We are currently looking bullish, and this is my confirmation bar right now. We have 42 minutes to confirm, price action. But if we look at the 1 hour, 1 hour looks amazing. The only issue is, look, this 1 hour looked amazing and then it dropped, right? So this one, we can see it stopped a little bit shy from the high, and then it never broke the high. This one already broke the high. So that's a really good sign. So we have a continuation bar that immediately started to continue. So what could happen is we could continue, pull back, right, over the next, 30-ish minutes, and then we could end higher. So you just never know, but this is where I can kind of see price action forming. So let's go ahead and jump into UJ because we were talking about that earlier. So let's go and look at the weekly just very quickly. All right, weekly on UJ. Let me get some water real quick. Yeah, so you can see off the weekly, we are overall in this bullish trend. We can see we got to a high point. This high point was right here at these body closures over on the previous weekly highs. So this is showing me that there's some resistance here. And now we had this huge bullish engulfing bar that attempted to go, like it was trying to go higher, but then the next week it opened and now we're just consolidating. So with this consolidation, I'm thinking we could continue to consolidate a little bit further. We are in this slight push up where we still have double bottom, higher low, right? So right now we could pull back to still form a higher low before continuing higher. So let's just look at the daily real quick. So the daily here is our double bottom right here, right? We had this major push up, and then we had a pullback with a slight higher low, right? Slight higher low, and we are currently pushing in the up direction. And then at this very moment, we have now broke these highs, but now we are looking as if this is going to be a lower high that is currently forming with a inverted, like an inverted hammer in that sense. So let's check out the 4 hour. Let's see how the 4 hour is looking right now. So right here, even on the 4 hour, we can turn on all of our information. So with this right here, we can see that price action is currently heading in the up direction. We're currently in a pullback at this very moment. So to add a little context here, here is my support resistance zone, right about here. So switch it to support resistance. So now we have a 4 hour, and I can delete, I could leave that on, but we can add this 4 hour Fibonacci now. I don't usually do Fibonacci's lower than a 4 hour. So weekly, daily, or 4 hour Fibonacci's are perfectly fine. Anything less than that, I typically don't add. So beyond that, right here, I just want to pinpoint, we also have this trend line that I mentioned earlier in this video. So we have like an A, B, right? So first touch point, second touch point, right? So the next few candles are going to determine how price is going to react. So with this said, what I'm anticipating would be that price is going to come down to about the 61%, and then it's going to try to reject from here to continue higher. So what I'm going to do is, based upon this information, I feel confident as long as my entry point was where this is located, right, 156.1 area, I'm going to move that to break even. So let's see exactly where my entry point is. So UJ, not that one, it's gold. So my exact entry point on this one was a little bit higher than the original one on the other one, right? So with that said, I still want my stop loss to be less of an amount. So I'm going to take my stop loss, and I am willing to put it right here at 156.01. The reason for that is going to be, if you come back to UJ, that would allow us to come all the way down to about here before continuing higher. And if we can get here, I just cut my risk in what, half or 3/4. So now I'm only risking, it's about 2/3. So now my total risk on this trade is looking at $35 versus it was sitting at about $200. So with that said, I am willing to risk that $35 to try to see if the trend will then continue. So going into right here, because I'm anticipating that price is going to reject off the 61% and then head up. If it doesn't reject off of the 61 and it comes to the 78, which is okay, then I still have the opportunity where it comes to the 78, still rejects, and then heads up. But if it closes below the 78, I don't want to be in the trade anymore, right? Because the highly probability is going to be that this is going to be a reversal now, and this was the lower high to this ultimate high, this slight lower high, and now we're creating this possible lower high. So for all of those reasons, I am anticipating price to reject, but have the opportunity where if price continues to head down, and if it doesn't want to reject to continue higher, then at that point I'm out of the position. So that is how I'm going to risk my trade. And this is just a red flag, and that is why I am allowing this adjustment to my stop loss. The red flag is simply put because of this now found lower high with this price action breaking the 4-hour EMA with relative strength. For all of those reasons is why I cut my risk down. So let's see what is next. So pre-market analysis wise, I am still in the expectation that we are bullish, right? Obviously on UJ. Overall, we had this major move from the upside, right? We had a pullback, and now I'm anticipating we're going to continue higher. Now looking at the 4-hour market structure, in the most recent information, we had this high, which broke this higher low, or sorry, this lower high, should I say. So from this high right here, we had a higher low, we had a higher high, we now had a higher low here. So until price breaks this high, we are still in an uptrend. Until price breaks this low, we're in an uptrend. Until price breaks this high from here, right, we are currently consolidating. Does that kind of make sense? So from there we go, here to most recent higher low to most recent high, this is our consolidation in our bigger consolidation currently. So with this said, I just showing you how I see the market, right? We can see that based upon the consolidation that it is currently forming based upon this higher low to higher high, we can see price came back significantly, made a higher low, and then we can look at the price action inside this consolidation. Price came down, right? Came up, made a lower high, made this kind of double bottom area. Then price made a slight higher high and then a higher low, showing me possible bullish structure. And now we created a bullish push to the upside. And that is why I'm anticipating a pullback and then a continuation to the upside. So that is pretty much what I am looking at as of right now. Me personally, I don't need this additional consolidation on because I can see it. But this is what I'm looking at. Now, looking at the 2-hour mark, and we can also go to the 1-hour mark. 2-hour mark, we can see market structure, right? We broke the high, and this is exactly my strategy as well, just to kind of pinpoint to you where I want price to break out of a previous high. I want price to come back to the most recent highs that it created, and or it can go as low as the 78, but I don't like the 78 as much, but it can go a little bit beyond to like right here, or right there, right? And then I'm anticipating it to break to the high. That's literally my strategy. And then around here, I will be looking for another entry. So at this very moment, right, we have, if you wanted to look at this one for say, we could have had an entry right here, right? Me personally, with this Fibonacci from A to B, I want, so I'll drag this over just so you can see it. I want the 50% right here to be, I need the 50% to be hit before I look for an opportunity to buy or sell, right? So by this price action, just in this moment, you have price action come all the way up here. You had price action come down and made a higher low here. You could have said, well, why didn't you buy off of here to, try to ride this move? Well, price hasn't touched the 50% yet. Once price touches the 50%, then I can look for a buy. So what happened was this one never came low enough to the 50%. So I had to wait for price to either pull back or continue further. So therefore, price then continued further, right? Price continued to go to make this new high. So by price making this new high, we have now pulled back. We have just tapped, right? The 50% just now, right? Look at that. Literally to the T, 50%. And what is it doing? It's starting to reject. I'm not going to buy this right now because that would be FOMO. That would be fear. There's no setup as of right now, like from start to finish. It's starting to form my setup, but now I have to wait for an entry opportunity. So on the 1 hour, you can see this major push down. So if the 1 hour over the next, couple hours gives me a minor pullback and then a higher low and then a bullish engulfing bar or a hammer candle or something, right, breaking this 9 EMA to continue higher, then I would enter for another buy opportunity. And then at that point, my original stop loss will go here and take profit. And then at that point, I will also have a secondary trade to try to continue the trend higher. So that's pretty much what I have on UJ. And then let's go ahead and see if we can jump into gold and silver. Just to see what opportunities there are. All right, so we're going to start with the weekly real quick. We already know how the weekly looks off of gold. So weekly off of gold is very straightforward. We are pushing up very significantly. We had a major weekly pullback, and then now we are breaking the highs once again. Right after breaking the highs, we can see that we went ahead and had a major pullback off of this area with this bearish engulfing bar. So one thing to just kind of pinpoint is going to be right here. We had a bullish engulfing bar. So price action wise, bullish engulfing bar breaking the highs significantly. And then immediately the next week, not only it rejected the entire candle, but then it went beyond the candle. And now it came back to almost the EMA. And now we're starting to push back up. So the way that I see this is two ways, right? So way number one, we could be forming some bearish opportunities with the 50%, 61 rejection areas. Now, I believe that we are still overall in an uptrend off of the daily. So due to that, right, daily and weekly is overall an uptrend. I'm personally looking for buys. I'm not looking to try to sell gold. I'm looking for buys. I'm expecting it to continue to ride. So on here, we have this bullish move where this price action came in, higher high, higher low, higher high. Now, price did break this higher low. You can also tell this is a very minor higher low because it made a quick pullback and then shot all the way up. The most relevant higher low that this formed off of a daily is going to be this higher low. And if you wanted to, you could take this higher low, which is technically accurate, all the way to this higher high. And if we look right here, right, with all of this information that we have, I have here a inverted head and shoulders that occurred right at the 50% minimum that I refer to all the time. So with the 50% pullback, I am anticipating that we are going to continue to break to the high, right? Break the highs coming soon. Now, I'm not anticipating it for this week. We could break the high this week, which would be amazing. But the only thing is, I'm anticipating that we are going to break the highs. I don't have a time horizon. So with this, I have a 4-hour time frame that I'm also going to break down. So this gap showed me a significant information that the market is really ready to ride to the upside again. And if we actually go back in time, on certain Sundays where the market loved to move, let me just show you this one as an example. Market was in this overall uptrend, and right here, Friday, right? Friday we closed right here, and then we gapped up Sunday, and then it made a minor pullback, and then just shot up. So I've noticed, and this is not every time, but I've noticed during this time frame, there was a lot of different Sundays, right? Monday, Sunday, where if on Sunday at the open, if it gapped, like it was riding the rest of the day. Let me see if I can find another one. So Friday to Sunday, right here, right? We had a major push up right here, and then we had a little bit of a gap, and then it just rode all the way up, right? And then I think there was one more beyond this area. Maybe not. No, that one didn't. But I'm just kind of looking at past data to kind of see what opportunities there were. I think it was right here. So Friday, Sunday? No, it wasn't. But that's pretty much what I was just trying to pinpoint is I've seen it recently. It's not currently in this very second. But I just wanted to show you as an example that I've seen it before where I've seen a gap and then it just rides. So as of right now, this gap was a really significant gap too. It was at 43.31 and it gapped all the way to 43.55. So that's what, $25 in gold of a gap over the weekend. So because of this gap, I felt really confident with my bullish expectation for gold, I guess. So pretty much with this inverted head and shoulders, it now broke the high, right? So this is my trading plan right here. So we now have, and I have a major support resistance on here, so I don't have to add this, but I just want to add it for context. This is now my most relevant information for my support resistance zone, which is where these previous wicks are. So this resistance, this is where I would anticipate price to pull back to. Now, I would not be looking to buy as of yet. I would be anticipating price to continue a little bit higher, make a pullback, and then continue. Now, if you're looking at the 4-hour mark, if price does close off of this bar as a downwards move and it starts pulling back, you could pull out this Fibonacci and you could determine off of this Fibonacci when price taps the 50 or comes to the 61 inside the support resistance zone. At that point, we could look for another buy opportunity. But as of right now, we are just pushing up and there's currently no 4-hour bullish opportunity. All right. So due to that, it's not in my area that I'm interested in. So I can place this here for the moment and just leave it there and call it a day. And then once I get some more information off of my lower time frames per se, then from there I can see if there's an opportunity later in today or going into tomorrow. So just looking at the 2-hour mark real quick, we can see that we have this overall low here. We had a double top right here that was formed, and then we had a higher low that was formed after the double top. And then from this higher low, you can add a trend line just so therefore you have it, where if price starts pulling back, right, on the 2-hour, 1 hour, you could also add in this context, right? You can add in that price is coming down, right? And then it comes to, say, the 50, the 61, or even the 78, and then rejects back up. And I just want to add this last thing for context, right? For gold, you can see that we had a major push down, a slight reversion in price back to the upside, And you can see that I'm anticipating it could come all the way down to the 78. Check this out. Right before, or right on this move, we had a major push down. And right here, we had a Fibonacci zone from A to B right here, where price had a major push down. And you could even utilize, this higher low here to this higher high right here, or this higher high, because either which one will be very similar, but not exactly the same. The reason why you could utilize this most recent low to this most recent high is because you wicked at the top so many times before coming down. Therefore, you don't have to use this high. But if you wanted to use either one, I'm just showing you as an example. So for me specifically, I would be looking at this, and we have made a major push back down, and we got to almost the 78. And then what happened? Major push up, right? So we could have a higher low, major push up. So I'm thinking that's what's happening here. We have a higher low, and now we need to make a major pullback for another higher low, where sellers try to trap, buyers, and especially with PMI, right? PMI could bring this down to the 78 and then push it back up, right? Buyers can come back into the market and try to buy it back up. So that's pretty much where I'm at with gold. We are currently possibly in a continuation phase right now to continue higher, and then we're going to wait for a pullback, or we could be starting to find a high in order to give us a pullback before continuing. So that's currently where I'm at with gold. And then, so the last one for today is going to be silver. So silver is actually, very similar to gold as of right now. Now, I just want to recap some stuff on silver. So let's just take silver and look at all of silver real quick. So all of silver from 1980 area, right? Look at this. Silver went from $6 around the 80s all the way up to about $50 in the 80s. So what happened? Price fell like a rock, falling from the sky. And then it made a lower high, came all the way down, and came all the way down to $5, right? Came back to the original price. So with silver, you need to be mindful that if you find a falling knife, please do not try to buy it every second that you can. So repeatability in the market. Price again, find some footing, right? And starts buying up like crazy, creating a double top right here around roughly $50, right? So then what happens? Because of price action slowly started to dwindle down. And this happened in about 2011 area. And then price slowly trickled down all the way down to about $15. And then price kind of stayed here for a while, kind of made a push up to about $25, $27 in that range, right? And then just kind of headed down. And now we have some price action building momentum. Now, for the first time in literally forever, I feel like we're about to break out into a Disney song right here, but in the first time in forever, we broke all the way to $83 per ounce. So with this, you have to be mindful where with gold and silver, gold could continue higher, right? Silver continue higher. It can do anything at once. But from here, we now have a double top around $50. We are currently at this price of $75. Price could find its footing up here and do what? For my strategy, price could come down, retest $50, and then skyrocket back up. You also got to think, if we dropped $50 all the way down to $50, that means we have moved farther than this entire move here. Look at this. This entire move from 2011 to 2020, that means we have moved, I think, more price action if we got all the way down to here in the next couple weeks. Almost the same price action. So this price action took 10 years, and this price action could take a couple weeks. You just never know. So with silver, all I'm trying to say is be mindful of how quick silver is moving currently, and that it can stop you out, and it can be really bad if you do not have a stop loss, or if you're just, trying to buy a falling knife. So with current price action, just to show you off of the weekly, we've been making price action going up. We made this little high, pullback, higher low, and then we had this major push up, right? Going over to a daily, we can see the same concept here, right? We made a high, pullback, and then we made kind of like this double top. We made a pullback, and then we broke to the high. As of right now, we are following this trend line here, which is nice. So as long as we continue to follow this trend line, we can continue to buy. So that is what I'm thinking of as of right now. So now we're in a 4-hour trend. So 4-hour trend, we're in this higher lows, higher highs, higher lows, higher highs, right? We had this overall higher low all the way up to this higher high. You have two minor structure points on the 4-hour, but on the daily, all you have is this higher low to higher high, and now we're creating this structure here to potentially continue higher. So with what I see as of this moment, we can see that I'm going to erase some of this most recent price action because it is getting on my nerves a little. So right here, we have seen a lot of resistance or support in this zone right here so far. And this is what I'm thinking of, because I was originally thinking that we could get all the way down here to about $66. But now we know we can get all the way down to about $50 as well. So right here, we are still currently bullish. As long as we're bullish, we're going to be buying until we get shown that we are now bearish. So what I'm trying to say is this downtrend right here was very strong of a downtrend. We have now broken the downtrend, retested this downtrend right off of the bullish trend at this support zone, and we broke a high, right? We broke this high right here. For all these reasons, we're looking for buys. So my area of interest would be right around here to get into another buy. So if we drop down to the 2-hour time frame, we're looking around this area for a buy opportunity. Now, I am still keeping the same exact way that I look at gold. We have currently had this high, right? We had this high right here. So I can just show you market structure, right? We came down, made this triple bottom here, right? And then we made this lower high. This broke and it made a slightly lower low. And then what happened was we broke to the high, giving us a higher high from this high. And then we had a higher low off the trend line. And then we had a new higher high. So right now we have a bullish structure. With the bullish structure, I am thinking buys. So off of the 2-hour, 4-hour area, I have this Fibonacci currently. I'm waiting for price to pull back to at least the 50% before we look for another buy opportunity. So if price is doing what it's doing right now and it's pulled back here and then it continues, that's perfectly fine. All I'm going to do is I'm going to wait until this continuation stops here. I'm going to move my Fibonacci where this is the higher low. Now, if it stops here and then starts reversing, this is now going to be the higher high. And then we need the 50% retracement. Look at how perfect that would be right here, right? So if price comes up to right here, makes a high, and then pulls down to about 50%, which is right at my support resistance zone, I would be looking for a buy opportunity here and then riding this trend back up. So that is pretty much what I have at this very moment on silver. So outside of that, let's go ahead and just take a quick glance at this information. Let me do this because I was going to show you something pretty cool. Just going to get this all set up. So discipline beats emotions every single time. So this is my website that I do have, and I have it created. This website I have created for traders to help you build your plan. So therefore you can come to the market with, information about like how you're actually going to tackle the market. So I just wanted to kind of show you our AI trading coach. So for our trading coach, we're going to go to a trading performance coach, and you're going to see some information in here. This is just some previous information that I'm going to take of this and I'm going to paste it right here. And that was weird. I am looking so there you go. Let me fix that one. So literally, if I came in here, I added a photo and I added this information. Hey, I'm looking at silver for buys based upon my strategy. What do you say? Right here, the AI coach is going to read the information. It's going to read and understand the photo, and then it's going to give you some guidance and some coaching about the photo and your question together, right? So the whole concept of this area is this kind of helps you keep the trading coach in your back pocket. So therefore you can get real live information to show, like kind of like helping you, guide you to become a better trader, right? So let's just kind of go through some information. So it's great you're consistently analyzing the same assets which align with mastering an asset, right? So this is mastering an asset through focused study, right? Inverse head and shoulders potential. Okay, so visible strengths of your analysis leading to a buy bias. So again, looking at right here, it said inverted head and shoulder pattern potential. Look at that, inverted head and shoulder. I didn't even draw it on there, right? So now I drew it on there. Right here, break of bearish trend line, right? We've already mentioned that one, right? Access, what was it? Ascending red trend line support. Yep. So we mentioned the downtrend, right? We mentioned the uptrend. Key support and resistance. Price has recently consolidated and held above a clear resistance zone. So that would be this area right here, my support resistance zone. And then you also have this support resistance zone here, which I can add to this color instead of the other color. And then beyond that, so EMA support, price is trading above the 9 EMA, which is a curving upwards, curving upwards. Fibonacci retracement potential for entry. You draw on a Fibonacci retracement from a low around January 3rd to a recent high. The price is currently pulling back. Isn't that what I just said, right? Potentially to the 38 or 50% retracement level. This indicates you're looking good for value within a bullish impulse, in the new bullish impulse. So this is literally telling me right now that my Fibonacci makes sense, right? So going back here, we have a Fibonacci. I don't even have the 38 drawn on. I don't use the 38 personally, but it's saying that we're currently at the 38 right now. So if you trade a Fibonacci 38%, look at that, we're already at the 38 Fibonacci percentage off of the 2-hour time frame, and you could enter for a possible buy opportunity if you are looking at the 2-hour or 1 hour for an entry confirmation. So beyond that, this one right here. So considering based on your strategy, what would you say? Right? So entry, timing, and confirmation, right? patience for retracement. So you have to wait for the retracement to go in. What is your exact trigger at your desired entry point? This is where me personally, I'm desired at the 50%, 61% level, right? So with that, I want it to, as I mentioned, I want price to pull back to the 50, 61 area before continuing higher. Now, there's an opportunity where it could pull back to the 78, just like gold I'm anticipating could also occur. So for all of those reasons, it's literally asking me these kind of questions right here. So stop loss placement, like where would you put your stop loss, targeting, and feel free to pause this video, check it out, read the whole details, right? Higher time frame analysis. Does the 2-hour setup align with the daily time frame? Yes, it does. Is the daily also showing signs of a reversal? Yes, it does, because we have 1, 2, 3, 4 rejections at this level of the $70 range. So for all those reasons, I am still bullish off of this time frame. So overall, your analysis provides a strong case for a long trade on silver. The confluences of trading support, a potential reversal pattern in versus head and shoulders, and the break of a bearish trend line suggests a shift in momentum to the upside. So this has given us coaching, it has given us information, and it is providing us information to be able to become a better trader and showing what knowledge you were able to obtain and show on your chart already. And then it's literally asking us additional questions. So therefore you can get better day by day and so forth and so on. So that is my performance trading coach as of right now. Beyond that, we have this as a website where you can jump on a website on your computer, or you can jump on a phone itself, whichever one it works. So you could literally be trading off your computer. You could take a photo off of your phone, and then you could literally be asking questions to your trading coach off of your phone the entire time while you're sitting there and trying to trade and this works for multiple different markets. I even have like a risk calculator that you can utilize, right? Telling us which market that you're working with, which instruments that you're currently trading off of, and then what platform you're utilizing for that specific information, right? And then you can look at trade details. Are you buying or selling? You can add in all your information here. And then why is your stop loss here? Like give an example of why you're putting your stop loss where your stop loss is, because this is the whole point where all your information that you're providing, once you actually are understanding where you are, right, then this is going to help stop emotional trading. And that's the whole goal of this whole platform right here, is to slow the trader down, right? Slow you down specifically in order to get better and better in the sense of making sure that you are taking your strategy and you're not just hopping in because of FOMO or greed or the desire of making money today versus yesterday, all of those reasons, right? So on the Reverend, right, you have a habit tracker. This sends you notifications every single day, right? You can edit your reminders, and you can edit this to and tailor it to you directly, right? You choose your time frame. You choose your time frame, and then after that, you can enable or disable. At this point, you can also enable daily reminders, of course, and these are your opening and closing time dates, just for recommendation of like, hey, based upon the time that I already selected, which is Chicago time, my New York session opens at 8:30 a.m. every single morning. Tokyo opens at 6 p.m. every single night, right? Which one? Sydney opens at 6 p.m. And then London opens at 2 a.m. So therefore, whichever session you want to trade, this is just allowing you the opportunity to make sure that you are on the right time frame. And then so therefore, you can now set up what time that you're planning on, coming to the market to do my pre-market analysis. So my aim is now 5 a.m. So what I'm going to do is I'm going to activate my reminders. So moving forward, my emails are going to send me an email at 5 a.m. letting me know that I need to be at the market, ready to rock and roll. And here's some examples of my daily habits. So on my daily habits, you can add a habit, you can add some discipline, risk management, or you review and analysis, right? Whichever habit that you're interested in. So if I want to, have a discipline and I want this to be daily, weekly, or per trade, I want it to be weekly, and I want to do a um, weekly pre-market prep on gold and silver. Right, so from here you can literally add a quick description, and then you can get an AI suggestion, or you can just add a habit name and add your habit just like that. But if I do AI suggestion right here, this is now going to give me a more detailed information based upon my habit of what I should be achieving, right? Gold, silver prep, right? This is my name. And then dedicated 30 minutes each week to analyze gold and silver market behavior before they open. This proactive habit will sharpen your trading insight and boost confidence in your trading ahead. Boom, use this, and then you're going to add the habit, and then that's it. Boom, we scroll down to the weekly time frame, gold and silver prep, it's right there, and then all you got to do is click it once you're done. Once you're done, check, right? And even up here at the daily, right, you can check off all of your information here whenever you're completed with them. And then from that, you can also go through and then complete your all daily habits to get a nice little confirmation of a celebration to yourself, showing yourself in an email that you have now completed all of your daily habits that you want to make sure that you complete. So therefore, you are not trading without any remorse, without any regret or anything such as that. This keeps a track of your consistency, right? So my highest score is 4 days, right? I was testing it out, seeing and making sure everything is working. Today's progress is 0 out of 5. So if we select this one, for example, this is going to make it 1 out of 5. Your daily consistency is currently 1, and we are restarting the overall highest daily consistency. So as I'm testing out everything, this is just one thing that I wanted to pinpoint to y'all. So therefore, y'all can see it, y'all can understand it, and then hopefully y'all can pretty much take it to go. You can also export all of your daily habits as a PDF. So say you come in here, you create all your daily habits, and for some reason, 2 months, 3 months later, you updated them a handful of times and you're no longer with the program. You can download all of your habits to your PDF file. And what's going to happen is it should pop up a PDF right here. Perfect. So right here, we're going to go back to the homepage, workbook PDFs. And then right here, your habit checklist. And all you got to do is download it straight to your computer. And you can have this on your computer, or you can print it out directly for yourself. And here we are. You have your daily checklist right here, right? Daily habits. You have your per risk trade, right? You have your weekly habits. So all of this is to say, this is all for y'all specifically in order to come in here and have better routines, better guidance, and to make sure that y'all have a plan in order to take care of all of your trading necessities. So if y'all have any additional questions, feel free to drop it in the comments and just let me know. But this is going to be the end of the stream. Y'all take it easy, guys. And I just want to end off by saying a little information about my trading strategy, my trading, my website. There you go. That's the word. So practice doesn't make perfect. Practice makes permanence. So why not practice the right systems with the Dragon Nest trades? Y'all take it easy, guys.